It is a great time to buy a house right now. I'm telling you, there are some opportunities out there that will knock your socks off. You can actually get into a house with less than $2,000. I'm going to show you how. But first, let's take a look at these figures here that we have in front of us so I can share with you how a FHA loan works. And then I'm going to bring in two examples of how you can reduce those funds to close. See that figure down there? $41,000. Two ways that you can get that down to $2,000 or less than. Let's just check it out. This is an FHA loan, standard 3.5% down. I use 715 as an example because this is the highest purchase price in San Bernardino and Riverside counties where you can actually put 3.5% down. Anything higher than that, you're going to have to raise the down payment. So interest rates coming in at 5.75%, 30-year fixed. Total payments coming in at 53.58. Cash to close coming in at $41,000. So before I show you those other two examples, let me just share with you a little bit more about this loan. This is the principal and interest payment. This is your property taxes, your hazard insurance, your mortgage insurance, and then coming down with your total payment. So what you see on the front screen in this presentation represents everything that's going to be in your monthly payment. Same with the closing cost. When we're looking at the closing cost, we have our down payment of $25,000, but you're going to say, hey, Joel, that was 41,000. You told me cash to close. Like, where's the rest of the money going? Well, you take a look at that. There's a fee detail right here. And this is a lender fee, credit report. These are third-party fees, title, escrow, county recorder, notary, home inspection. That's optional. It's not mandatory, but we, recommend that you get one. Appraisal, hazard insurance. Now, these bottom ones here are to set up your impound account. So you can see that's a fair amount of money of the total funds needed to close. That's like, I don't know, 6,800, well, 7,200 bucks somewhere in there. And this is to set up your impound account. So in order for your monthly property taxes and homeowners insurance to be included in your payment, you have to set up a reserve account. And on average, we collect 6 months. You have to pay a whole year of hazard insurance up front at $200 a month. That's $2,400. And then 3 months in reserves. That's also a separate impound account. So this is giving you an idea of where is your money going. It's not towards all cost and disappearing somewhere. You're actually getting monies prepaid into the property and then thus bringing your cash to close to 41,000. Okay, let's bring in a couple more examples real quick so you can get an idea of what's going on out there. And I'm just going to bring them both in because they're both really good. Now, it's the same idea of an FHA loan, but what we're looking at is a CalHFA loan. It's the same FHA loan that I just shared with you. The only difference is instead of having a down payment, you're basically financing the down payment. So that 3.5% that that $25,000 that you've seen, well, that's actually being financed, and you can see the difference in the loan amount. Your starting loan amount will be at 727, where your starting loan amount over here is at 702. So that's the first and the second put together. But you can see that reduced your funds to close by a fair amount of money. But so what's this option next to it? Well, that's where the market's really good right now because of the fact that there are sellers out there, and not just a few. There are a lot of sellers out there that'd be glad to sell their house and provide a $25,000 credit. So if you come in with the full price offer, ask for a $25,000 incentive, put this down payment assistance program behind it, there you go, $1,600. The cost of basically, because remember I shared with you that part of your cost is your appraisal, your home inspection. That's the money that you need to come in with out of pocket before you close. So that's just about your out of pocket expense. That's how you can get into a home right now. It's $715,000. Riverside, San Bernardino County, other counties too. They have different loan limits. I just picked these two counties because this is a very popular price point and a very popular program. Get into a home today for $1,600 and look at that. It's only a difference of $192 a month. So it's not bad because you just walked away from bringing in $41,000. Now, don't get me wrong, that's perfectly fine to do. This side over here is a more efficient way to put it together. But if you don't have $41,000 to close and you're looking for some great opportunities, well, there you go. That will get it done for you. So Joel Burlingame here, JB Home Loans. And if you need any help putting a mortgage plan together, I'm here to help you. Have a wonderful day.